Hey, I'm very grateful that you take a few extra minutes to dig into how you can create tax exempt wealth. This should only take about 10 minutes. Now, I know you can take this information and go anywhere with it. I'm absolutely okay with that. But that is exactly why other experts in my field won't market the way that I do. You see, they like to hold these conversations close to their chest so that you have to meet with them face to face, right? I did that for a long time as well. However, I'm done being mysterious about strategy in order to set appointments for myself so I could demonstrate my expertise to people. I'll do it now, here, or anywhere, whether someone works with me or not. Just promise me one thing. You'll take it serious for yourself, because if you're interested in minimizing risk, optimizing cash flow when it's finally time to retire, even if it's 30 years away, generating returns, creating efficient distribution strategies, optimizing your liquidity, optimizing control, and maximizing your tax exempt wealth, then what I've already showed you and what I'll dig in deeper now is very relevant for you. Look, this has nothing to do with selling insurance. It has everything to do with helping you acquire the strategy that you want to have. Let's do a quick lesson on overfunded insurance contracts that I haven't covered as of yet. It's highly likely that what I'm about to show you is something no one has ever shown you before, not even your current insurance professional, but you certainly deserve to see it. So let me flip over to my screen right now. You're going to like this one. So I'm going to use an example of an actual client I met with this morning. This box here, this box represents his life insurance contract that he's wanting to buy. And it has a death benefit of $2,800,836. Now, there's a reason to this. I'll explain that here in a minute. There is a minimum that he could pay for this insurance, and who determines that minimum? Other than himself, because if it were up to him, he would want it for free, right? So who determines this? It's the insurance company. They look at your age, your sex, your habits, your hobbies. They test your blood, your urine, and they decide how much they are going to charge per month or annually in order to have this death benefit of $2.8 million. Now, in this case, for this client, they determined that for $2,946.12 per year, he could have this death protection. This is term insurance. Have you ever wondered how this works? I mean, economically, it can't. You give them 2,900 bucks and you walk in front of a bus and your spouse gets $2.8 million. You can find studies that show that less than 2% of all term policies ever pay a death benefit, meaning the people don't die during the term. So 98 cents of every dollar collected for a term policy is pure profit to the insurance company. Now, if there is a minimum that's advantageous to the life insurance companies, there's also a maximum. Did you know that? Did you know there was actually a maximum amount that this client could pay for this same $2,800,836 policy? Here's what's interesting. Who determines the maximum? It's not him. It's not you. It's our government. The US government sets the maximum. Now that causes me to pause and think about that fact for a moment, since we know that they try to take the fun out of our success. Why would the government give this guy, give you and me a limitation on what we can do with our own money? I mean, it's pretty easy. Because they want to control our funds as much as possible and the corresponding taxes of those funds. This maximum wasn't always present. Prior to 1988, you could put as much as you wanted into an insurance contract. You could shove capital into these things. Kind of interesting. But in 1988, with the Technical and Miscellaneous Revenue Act, the government established a maximum dollar amount for each policy by making one big change to insurance contracts. They discontinued the ability to dump a lot of money in at once and still receive favorable tax treatment. So there's no more putting $1 million in one time and still maintain a tax exempt status. Now there's countless ways that someone could end up with a large sum of money and want to protect it. So in order to receive the tax exempt benefit, the government said you must put money in more than once, not just one time, meaning more than one premium payment. But they didn't specify for how many years. Interesting, isn't it? So in 1988, the government said you can no longer make one large premium deposit. You have to spread your deposits out over time. If not, if you make one big payment, if you dump all of it in at once, then they will tax your life insurance monies just like an IRA. I mean, aren't they the best? Gosh, they have our best interests at heart, don't they? Now, remember how I said I believe the IRS tries really hard to take the fun out of being successful? Here's yet another example. Please note, they didn't get rid of the tax benefits, not one bit. All they did was change how you get your money into the contract. Our own politicians have to follow the tax code as well. So here's how this works. The insurance company will provide you a health rating, right? And they will then run the math to see exactly how much money you can shove into the contract based upon the government's limitation. So using the example of my recent client from this morning, he wanted to put in $120,000 per year of his capital. So they underwrote him based upon his age, his health, his sex, his habits, and the desire to fund a policy to the tune of $120,000. They approved him for the minimal, the smallest death benefit possible of $2,800,836. You see, the strategy here is to buy the smallest, to squeeze this corridor, buy the smallest amount of life insurance allowable by the IRS in order to get the most amount of your cash into the contract. We want to squeeze this corridor here. Does that make sense? So that's what we did with this guy. He wanted to direct 120 grand of his annual cash flow into an overfunded contract instead of instead of shoving the money into his capital gains bucket, or certainly, a pre-tax ordinary income bucket. That was bucket number 1. He wanted to shove it into his bucket number 4. So we took an application, he was underwritten, they approved him, and based upon his health rating, the government's limitation, for his 120,000, he could buy 2,800,836. That's it, of life insurance as the minimum death benefit allowable by the federal government in order to get all of his premium working inside the contract, in order to make it overfunded with cash. Oh, it's so beautiful. But what do most insurance people do? Could you imagine how much life insurance he could buy if he was willing to spend 120,000 per year? I mean, probably tens of millions of dollars in protection, right? But that would be a waste of his money, since all of it would be going to the cost of that large amount and very little of it to the accumulation. So if that were the case, he should definitely buy term and invest the difference, because he could get this 10 millions in coverage for significantly less. But you see, he's overfunding this policy. He's buying the smallest death benefit and maxing out the government limitations in order to create a large bucket of tax-exempt wealth. Again, it's so beautiful how this works. You can do this too. You'd simply determine what you can direct in the form of an annual premium from your buckets. We look at your new money, your contributions, and your old money, which is money that you currently have. And how much of it do you want to create in the 4th bucket? That's it. Now, where you definitely want an expert is when you're designing these policies to create the room for future assets, as I discussed in that first video. For that, I definitely recommend you book some time on my calendar. And if your agent has never had this conversation with you, then I'd strongly suggest you find someone who understands this exceptionally well and can therefore properly implement it for you. My calendar is available to you. Simply click on the link below and you can book something with me immediately.